Before we begin our investigation, a quick reminder. All information in this video is for educational purposes only and is not financial advice. Friday, January 2nd, 2026. I need you to look at the date. Mark this moment, because right now, at this exact second, the financial world as we know it has ceased to exist as a single entity. It has snapped in two. Right now, there are two competing realities. In reality A, the digital world on your monitor, the silver ticker is flashing $77. Everything looks calm, the algorithms are running. But in reality B, the physical world, on the streets of Tokyo right now, people are standing in lines, literally fighting for metal at $130 an ounce. You are on New Era Economics. Subscribe to learn more. Our investigation is just getting started. This is not a market premium. This is not a dealer spread. This is a glitch in the matrix. The price divergence has hit 71%. In the history of modern finance, we have never seen a disconnect this extreme. It means one thing. The global pricing mechanism is broken. The bridge between paper and metal has collapsed. There's a sense in the air that a crisis is coming, one that will make 2008 look like a rehearsal. But where is the hard evidence? Where is the first crack in the dam? We begin with the shockwave in Japan to witness the face of real panic. Next, I will unmask W. Chu killed the market and why, revealing the architects of this chaos. We'll then use that revelation as a key to the final door, the fatal flaw in the dollar itself, proving why the Federal Reserve has no way out. And in the final act, I will reveal the bank's endgame trap designed to seize your assets. In this video, I will show you the 5 signals of this fracture. We will go from the obvious cracks on the surface down to the tectonic shifts in the very foundation of the system, shifts that the banks are desperate to hide. And the 5th signal concerns you personally. It reveals exactly how this collapse will impact your assets and, most importantly, what you can do in that moment to survive it. But let's start with what is staring us in the face. And signal number 1 is right before your eyes. The price rift. Look at your screen again. That $77, it is a lie. It is a ghost price. It is a number at which algorithms trade digital liabilities with each other in a closed server loop in New York. But try to take that $77 and buy physical metal in the real world. You can't. The product simply does not exist at that price. The world has definitively split into 2 camps. The first camp are those who trade promises. They look at the chart, they draw support lines, and they think they understand the market. The second camp are those who have woken up to the truth. They are desperately hunting for real inventory. They know that in a moment of crisis, a bank's promise isn't worth the paper it's printed on. The official price has become a hallucination. $77 in New York versus $132 in Asia. This spread is not an arbitrage opportunity. It is a death knell for the paper market. But why isn't anyone closing this gap? Why aren't the banks buying here and selling there? Because they can't. And that leads us to the second, even more terrifying signal. Let me immediately answer the question screaming in your head right now. You look at these numbers, $77 in New York and $132 in Shanghai, and you think, this is free money. I'll buy low here, fly it there, and pocket a 70% profit. That is old world logic. In the reality we woke up to after January 1st, that logic leads not to wealth, but to prison or bankruptcy. Why isn't this massive rift closing? Because 3 impenetrable walls have been erected between the 2 worlds. You cannot buy cheap metal on the COMEX because it isn't there. The registered inventory is melting away. Stocks will hit 0 in 19 days. If you demand delivery today, the exchange will invoke force majeure and settle you in depreciating paper dollars. Dead end. Even if you find the metal, you can't move it. Lloyd's of London and other major insurers have suspended coverage for precious metal shipments. Without insurance, no ship leaves the port. Logistics are paralyzed. Let's say you think you're smarter than the system. You decide to stuff a suitcase with silver and fly to Shanghai yourself. Stop. Starting January 1st, 2026, China and several Asian nations introduced strict controls. Attempting to bring 100 kilos of silver in a suitcase is no longer treated as commerce. It is classified as smuggling strategic raw materials. And if you try the legal route, you are hit with a 13% VAT immediately. That tax, combined with shipping, instantly eats up the very profit margin you were chasing. The arbitrage is dead. The West is trapped in a paper price cage, and the East has sealed its borders. But who initiated this? Who pushed the red button first? The answer lies in Beijing. We have arrived at ground zero. Signal number 3 is the answer to the question, who killed the market? While the West was celebrating New Year's, on January 1st, Beijing quietly dropped an iron curtain, Directive MOFCOM 2026-1, officially went into effect. Many analysts missed this, dismissing it as a licensing update. Do not be naive. This is an act of resource nationalism. The document effectively blocks silver exports for 90% of private refineries and traders. Previously, they flooded the world with metal. Now they are cut off. Only the state-owned giants retain licenses, but they have new orders. Domestic security comes first. But the terrifying part happened the very next day. The People's Bank of China has initiated a forced buyback of warehouse stocks in Shanghai. Essentially, a soft nationalization. Why do you think Apple and Tesla remain silent while their stocks jitter? Because their supply chains are broken. They are used to extracting metal from China. Now they are being told, sorry, this metal is needed for our solar panels, for our missiles, for our security. China has created an internal silver black hole with a 400 million ounce deficit. Silver can now flow into China, but it can no longer flow out. They are vacuuming up the remnants of global supply, creating a vacuum that is ripping Western exchanges apart. But even this is just the tip of the iceberg, because the chaos in the silver market is merely a symptom of a greater disease. Silver is just the canary in the coal mine. The real danger, signal number 4, reveals that it's not just the wall that is cracked. The very foundation you are standing on has split. You need to understand one thing. This chaos in the silver market is just a crack in the plaster. But signal number 4 reveals that the foundation of the house itself is rotting. The metals market isn't sick. The dollar is sick. Silver is just the first asset to catch the fever. Look at the macroeconomic data released this morning. The debt black hole. U.S. national debt officially topped 38 trillion and is on track to hit 41. That number is so large the human brain refuses to process it. But here is a number you will understand. The interest trap. Servicing this debt, just paying the interest, not touching the principal, now costs the budget $1.6 trillion a year. Think about that. That is more than the entire U.S. defense budget. That is more than Social Security. Right now, America is spending 35 cents of every single tax dollar collected just to pay the minimum balance on a credit card that can never be paid off. At any other point in history, the Fed would simply turn on the printer, conjure a few trillion out of thin air, and drown the fire in cash. They did it in 2008. They did it in 2020. This is the tectonic shift. If they print money now to save the banks from the silver squeeze, inflation instantly turns into hyperinflation. The dollar turns to dust. If they don't print, the system collapses under the weight of debt and defaults. They are cornered. Checkmate. The foundation of the global financial system is crumbling. Investors are fleeing bonds for real assets because they realize the math no longer works. But the system will not die quietly. A cornered animal is the most dangerous. And that brings us to the final 5th signal. But do not think for a second that the system will just collapse and hand you its wealth. The enemy is not surrendering. The 5th and final signal is the activation of defense protocols. The banks are preparing not to save the market, but to save themselves. You see the price rocketing up and you want to sell, or you want to panic buy? Forget it. There is a little-known rule on the exchange called Rule 589. As soon as silver moves too fast, trading is forcibly halted. The market is frozen. You will stare at your screen, seeing a price of $100 or $200, but your sell button will be grayed out. Many of you hold popular funds like SLV, thinking it is silver. You didn't read the fine print. The prospectus clearly states in the event of a metal shortage, the fund has the right to settle with you in cash. When real silver is trading at $150, they will force close your position at the official ghost price of $77. They will hand you back your depreciating dollars and keep the real metal for themselves. While you are watching the exchange charts, the banks are playing on a different field. Reports show that giants like JP Morgan are aggressively hedging via direct contracts with miners. They will survive. They will get the metal directly. But investors in paper silver will be left with nothing. Their goal is simple: to lock you inside the burning paper theater, blocking the exits with rules and regulations, while they quietly slip out the back door with the real assets. Conclusion: the year of preservation. So, look at the full picture. This is not a market correction. This is a chronicle of disintegration. So remember this: 2026 is not the year of profit. It is the year of preservation. Forget about making 10x gains. Your only goal is to preserve the purchasing power of what you have earned over your entire life. The world has split, and the only thing that matters is which side of the rift you are standing on when the music stops, in the world of paper ghosts or in the world of real things. So, the world has fractured, and the financial system has set its traps. Does it sound hopeless? Only for those who do not understand the rules of the new game. If you have watched this far, you are no longer just an observer. You are a strategist. Now, let's move to the solution. Here are 3 unbreakable rules to help you navigate this storm. It might sound strange when we are talking about the decline of the dollar, but listen closely. The first wave of a liquidity crisis hits everything: stocks, bonds, even crypto. All paper assets can temporarily drop in value due to panic. Your first task is to stay standing. Create a financial cushion in cash to cover 6 to 12 months of living expenses. This money is not for investing. This is your moat, your protective barrier. It ensures that when markets become volatile, you are not forced to sell your real assets just to buy food or pay bills. If the thought of your stock portfolio temporarily dropping 40% causes you anxiety, move to cash now. Peace of mind is worth more than potential gains. Forget about the prices in Tokyo. The real opportunity of the century is right here in the West. As long as the gap exists between the screen price of $77 and the real value, you have a unique window. Many people complain about dealer premiums. They say, why should I buy a coin for $100 if the spot is $77? That is a mistake. When you buy physical metal from Western dealers, even with a premium, you are not overpaying. You are essentially buying a real asset at a discount relative to its global value. You are exchanging depreciating digits for a hard resource. But heed this warning. This is not speculation. The spreads are high. If you buy today to sell tomorrow, you will lose money. This is a buy and hold strategy. It is about long-term preservation, not a quick flip. The system will use its final tool, the price on the screen. We will see sharp drops, flash crashes, where the price might paint $60 or $50. The goal of these moves is to make you doubt and surrender your asset. Your defense is a new metric. Stop looking at the price chart. Your only indicator is the inventory level in the COMEX vaults. The rule is simple. As long as inventory keeps falling, especially below the critical 30 million ounce mark, any price drop on the screen is just digital noise. Ignore it. Watch the quantity of metal, not the price of paper. And finally, regarding tools, avoid paper funds that do not guarantee delivery. If you cannot hold it in your hand, you do not own it. In an environment of systemic uncertainty, nothing compares to physical ownership. The pattern is complete. We have exited the era of cheap money and entered the era of consequence. 2026 is not the year to chase excess profit. It is the year of capital preservation. Your goal is not to catch the bottom of a chart. Your goal is to safely cross this rift and land on the side of real assets while they are still accessible. Because in a divided world, those who preserve their purchasing power will be the ones writing the rules of the new reality. You are on New Era Economics. Subscribe. We will be tracking these events in real time. Thank you for watching, and I'll see you in the next video.